I'm going to go ahead and get things rolling because I want to make sure we have plenty of time to go through this today. And typically for if you've joined any of our past presentations, it's typically very visual. We're always doing product page teardowns. We're looking at sites. We're looking at checkout pages, etc. This topic just inherently is a little bit less visual, and so we're gonna have visuals that look a little more like datas and charts and tables and things like that today. So we're gonna try to keep this as entertaining as we can, or at least as high level as we can, and not drown you guys in a bunch of data analyses around this. So if you joined our last handful of presentations, this is going to be just a little bit different. But the structure for today is we're going to go through and sort of outline our framework for how we think about setting pricing and how to test into the right level of pricing for your brand and for your products. And make sure if you're joining, you stick around until the end because we will open this up to Q&A. So if you guys do have any questions, maybe that are more specific to your brand or to your industry, we're happy to try to tackle those live here at the end. But the goal is let's use the time today to sort of set up a framework so that you guys can understand if you are in a position where you are thinking about increasing pricing or changing pricing or just wanting to better optimize pricing, you actually have a framework for doing that. So let's jump into it. Also, what I want to call out here right just at the very beginning for anybody who is attending the presentation today, and this is something we only offer to folks that actually attend our presentations live, but we are offering 50% off our full store analytics and site audit. So this is something we always offer as part of our presentations for people who like to join. We do a full store analytics, CRO, and site audit that will break down very specifically all the areas of opportunity that you can capitalize on to improve conversion rates, revenue, average revenue per session, etc. It's a very in-depth analysis. So if you're joining us today and you have any interest in having us take a look at your site, look at your analytics, and do a full site teardown audit for you, we're offering that at 50% off for anybody who is joining us today. All right, let's talk about the agenda for today. So what we are going to be covering is very specifically, how do you test product pricing in order to find that sweet spot? And that sweet spot is going to be different for every single brand. You may be in a position where, look, you just sort of picked pricing based upon the competitive market. You may be in a position where you have to change pricing because you're being affected by things like tariffs or other increases in your product inputs. You should always be in a position where you know how you can either increase or decrease pricing and understanding how that's going to affect the overall business. And so what we want to do is show you how you can figure that out. So one, we're going to show you how to actually test into that. We're also going to show you the metrics that you need to track and how you should be measuring them. And then here at the end, we're also going to talk a little bit about shipping thresholds. So while that's not necessarily a product pricing conversation, it is a tool that you can use to leverage to increase conversion rates and to increase profits and increase AOV. So it's definitely a tool that we would recommend testing into as well. And we'll talk a little about how we think about setting shipping thresholds or testing into different shipping thresholds than what you have right now. So before we jump into this, for those who have not joined our prior presentations, my name is Alan Burt. I'm the founder of Blue Stout. Blue Stout is a Shopify-focused design, development, optimization firm. We primarily work with 8-figure brands to help them optimize their storefronts through UX design, CRO testing, and then also development. And today I'm joined by Eric, who is our head of optimization. So Eric leads everything optimization, CRO related at Blue Stout. And he is the one that leads any sort of price testing that we are doing for our brands. He is the one that is in the driver's seat of this price testing. So he's going to be joining us today to help us talk through how he thinks about setting up price tests for our clients.
Hey, everyone. Thanks for joining.
All right. So let's jump into it here. So first off, we're calling this today the pricing formula. So how should you think about setting pricing? So ultimately, this kind of comes down to the question of like, why even price test? Right now, this is obviously a hot topic because of tariffs, but at the end of the day, this shouldn't just be something you're doing because of the current tariff situation. And the question we like to ask is, or like we posed brands as a reason why you should think about price testing is that at the end of the day, what are you going to do if your costs increase? And this could just be any of your inputs. So supply chain costs, whatever it may be, maybe it's just a component of the manufacturer. When you're manufacturing a product, maybe just one of those components is increasing significantly. Maybe you're in a position where, like Eric, you actually brought this up the other day, like you're a coffee company. Maybe you sell coffee beans and there's in fact a drought. And so you're going to have, you're going to have a decrease in your supply of product available to you, right? Or which is going to then increase the cost to you to then sell it. And so there's lots of things that can affect the inputs that are driving your costs and your margins. And so you should be in a position where you always need to understand, if I had to raise pricing, what would happen? Or if you're in a position where it's like, look, we operate in a very competitive environment, a very competitive space, and we see that our competitors are matching our pricing. Is there an opportunity for us to maybe decrease price and actually see an increase in sales and profit? So you should understand, ultimately what we're going to talk about today is what is that very specific price elasticity for your brand or for your specific products. That way you always know what an increase or a decrease in pricing would do for the business. That is the goal. And I think the piece I want everybody to take away from this is that while, yes, this is relevant to tariffs, highly relevant to the tariff environment, this isn't something you should only be doing if you're being affected by tariffs. You should always understand how price increases or decreases are going to affect the business.
And the reason why that's really helpful too is I think a lot of times we find through price testing that even if your inputs don't increase in cost, you might be able to increase some prices without losing conversion rate. So a lot of times a secondary benefit from like gathering the data related to some of this scenario planning actually shows you how you actually do have more pricing power than you thought you might have. We worked with a client once in the past that had made to order items, and they had just reached the capacity of what they could make in a certain time frame. So they decided, hey, let's increase prices. No inputs had increased, but they just wanted to gather more data. And then that data helped them set their pricing for the future so that they could just increase margins regardless of any increased inputs.
Yeah, it's a great point. I think it's, for anybody here that's a brand owner, right, that started the business, or maybe they are in the position where they're setting pricing for products. It's a little bit of I think more of an art, I think, for most brands than it is a science, right? So they're probably looking at competition. You're looking at your input costs and you're understanding what margin you need to have in order to be able to then also acquire customers at a certain price point and still make the margin you need on the back end. So you're sort of, most cases, you're looking at competition or you're sort of backing into what that pricing should be. What and I think at the beginning, if you think about it for like a brand that's starting or in the early stages, that makes sense. That's the way you should be. That's the way you should start. But once you have a significant amount of traffic and enough volume coming through the store and through the brand, you have an incredible opportunity to actually utilize testing to determine what is the optimal price point for your product or products. And so that's where, for more mature brands that have scaled, this is where this comes into play and really should be the way you should be thinking about setting prices. All right. So let's talk about what to consider. So Eric, I'm going to lean on you to sort of walk us through this a little bit. But I think, the first point you'd probably make is that every brand is going to be, different. There is no sort of perfect formula for everybody to follow. So how do you think about what prices to test or how to start price testing based upon sort of your situation as a brand and the various different sort of inputs to that?
Yeah, good question. So, much like any way that we're trying to optimize a site, there's never going to be like one single silver bullet that works for every type of site, every product, every audience. But we like to try to think about things in frameworks. So, here's kind of like the guiding principles that we use to help set these methodologies. When it comes to pricing, especially related to changes in tariffs, that really also depends on your marketplace and your competition because you're going to move based on what your competition is doing. If you are a challenger brand, you'll probably have a very different strategy with both pricing and how you're absorbing or passing on tariffs than you do when it comes to being a like incumbent, winner in the space. So the way to figure that out really lies in understanding the elasticity of your demand. So we use price testing to understand that relationship between demand and price for your particular audience and your particular product to understand how that stacks up against your competitors. Because then if you gather that data proactively, as you see your competitors start changing their prices, whether it's based on tariffs or not, you can have some idea of what effect that's going to have on the demand that you see. Maybe you see somebody who is your direct competitor start raising prices, but you know that if you raise your prices, your conversion rate is going to drop too quickly. Then comparatively to that competitor, you're going to have the lower price. So maybe it actually becomes more valuable for you to stick with your current pricing, knowing that you'll be taking some of their market share. So there's kind of these different items that we're trying to triangulate between understanding your price and elasticity demand, as well as relative to your competition. What are they doing? And I always like to think that, every projection looks great on a spreadsheet, but actual numbers are much, much more valuable, right? So I always try to encourage our clients to run tests like this to gather the data so that you have some data to rely on as opposed to just, worrying when your beautifully mapped out spreadsheet of a projection starts falling apart.
Yep. And I think you think about, we're in an environment right now where the tariff uncertainty is probably the biggest concern right now, is everybody just doesn't quite know what's going to happen. And so if you wanted to position yourself well to be able to make decisions very quickly, if you have to, running price testing and an analysis like this right now is a really good idea. And that way, you're not sitting around a boardroom table with your co-founders or your team arguing over how much you should raise prices or decrease prices. You actually have already mapped out what the effect would be in the current environment. All right, let's talk about a framework. How do we think about, and we try to sort of boil this down just very simply, and we'll dig into each of these components here as we go through this. And so, Eric, what I'll do is I'll sort of lay out the framework, and then I'll let you kind of add some color around each of these main components. So when you think about, okay, where do we even start? How do we even start this process of price testing and identifying that sweet spot of pricing for our situation? So the first is you actually want to set up various different pricing tiers. And we'll talk about how to do this here in just a second. But you don't just want to test one increase, right? Or one decrease. You want to test this at various different, what we call brackets. And this is what we call bracket testing. Then for each one of those tiers or brackets, you want to run that as an A/B test. So that way you actually have a statistically significant result to show you what the impact on store performance, so conversion rate, units sold, revenue, would be. And then you want to track those key metrics. And we'll show you sort of an example of how you want to track these and how you want to compare them against one another. But the idea here is you don't want to just run each of these in isolation, sort of look at the number and determine whether it's successful or not. You want to run all the tests for each of these different bracket tiers and then map all those together so you can see very specifically how things are changing per each increase or decrease in price point. And that's what we mean by map the results. So you think about just a very simple 4-step framework here. Choose your tiers, run A/B tests for each tier, track those metrics, and then map the results so you can specifically see the impact at each incremental increase or decrease. So when we talk about setting tiers, Eric, how do you like to think about setting price tiers for the brands that we're working with?
Yeah. So always start with the price that you're currently charging for any one product. That's going to be the thing that you have an existing baseline for, the most amount of data for, and that's going to be the reference point that we work from. So if your current price is, let's say, $150, and you want to understand how much more can I charge for my product or my service over this while maintaining the current amount of demand, or at least being able to charge that and then measure the downward pressure that that creates on your demand, we think of that in tiers. And we do that in tiers for a few different reasons. You'll see here, if you have like a $150 product, the variations that you want to test are going to be, the more variations you can test, the better. But you also really need to have the amount of session data and transaction data to support, a high amount of different variations. Ideally, we want to have a minimum of three. You would think like A/B test, maybe I'm testing 150 versus 160. But what we really want to gather from this test is data. So that's why we like to try to, within our framework, always recommend having three price points that we're starting with. Because if you get two different price points and the demand associated at each of those different price points, you'll get, when you map that out on a time series, you'll get a straight line. But that's never going to be a direct relationship. So that, what we want to get is as many data points as we can, so that once we start plotting those out along a supply demand curve, then we can understand, okay, what degree will my demand change at each of these different price points? As you can see here, it's never going to be like a straight line. It's going to be exponential in one direction or the other. So that's why we always want to get at least three, because then you'll understand that relationship within the bounds of your max and your minimum, so that you can then statistically look at that and understand, okay, here's the demand that I expect will generate at these different price points. I also always try to encourage, if the margin profile of the product or the service can support it, try testing a lower price too. A lot of times we'll see an outsized improvement in the demand for a product at a lower price, so that then you have that data point. So you can say like, oh, if, for example, what if I did, if it's a product and I could reach the next minimum order quantity and get a price break on that, that would actually make this make sense in terms of the margin profile, then you start to get some data to understand like, oh, actually, if I could offer this product for, whatever, $10, $15 less, then I also know that I'll be able to reach a higher MOQ. I can reduce my costs, and it'll actually match the same margin profile once you get to that new level.
Yep, it's such a good point. I think a lot of brands don't think about this idea that by lowering price, we could actually have an increase in an actual profit, right? From the increase in just site performance and conversion performance. And so it's a great point to understand kind of where you sit on the curve. And so again, the idea here is, by running this type of analysis, you're able to understand just where you sit in your environment. What would happen if you had to decrease prices or had to increase prices? You can then sort of understand what the effect on the business is going to be. And so ultimately, like Eric said, that's going to be some sort of a curve. It's not going to be a linear relationship. If you just increase pricing, 10%, 10%, 10%, 10%, you're not just going to see a 10% decline. All of it is going to be very dependent upon the macro factor, your competition, sort of where you sit, whether as an incumbent or a challenger in the marketplace. Lots of things are going to determine how your demand curve looks. And that's why you have to run testing, understand sort of where you sit on that curve currently with your current pricing. So when we look at how do we measure this, right? So we're running this as A/B tests, like Eric mentioned, for each of those different price points. Do a low price point and then also increases, map those. And what do we mean by mapping? I mean, it can be very simple as literally just putting it into a table to understand. In this is just an example scenario. If your price point started at $95, right, and then you were to decrease it by 5 or increase it by 5, what would happen? And so this is the best way to understand, from like a revenue standpoint, how is the top line revenue of the business going to be affected at each of your price points. So map this out in a very simple table. And in this example where we did do this, you can see that there's actually a scenario where increasing $5 has absolutely zero effect on the business, right? So you're actually likely underpricing your product at 95, because your customer sees zero difference between 95 and 100. Maybe your competition is actually more expensive and it's 110. And so they still, your customers still view 100 as being a deal, as an example. So you're leaving revenue on the table by not testing that higher number. In the same vein, by lowering your price point, you're actually able to then increase your conversion rate, sell more units, and at this price point, still drive more revenue than you were at your existing price point. So in this scenario, you find yourself where, look, I could either increase my pricing by 5, I could decrease my pricing by 5. And in both cases, from a top line revenue standpoint, I'm doing better than I was originally. So this is why we always want to map this out so we can see that difference. But ultimately, what we recommend and what we're going to want you to do is not just look at top line revenue. Really, what we care about is profit. Everybody here cares about profit. They care about cash flow. And so you also need to be factoring your input costs. And we, just for the sake of simplicity, we didn't add a bunch of new sort of columns in here to show kind of what those input costs would be. But as an example here, just so you can see, you're going to at some point as you start to map this out and you include your input costs, so your costs to produce the product or to sell the product, as those are increasing, you're going to find this sweet spot that says, okay, if we increase pricing, what's the effect going to be on our profit? So in this scenario, by increasing from 95 to 100, we're actually able to maintain the same conversion rate, the same units sold at a higher price point. So obviously there's going to be a margin increase or a profit increase in that scenario. So this is a great place to be in. And then you also find that if you're increased at $5 more, that's when you do start to see a decline in performance, a decline in units sold, a decline in revenue. But depending upon your margin profile, you may find out that you actually are producing the exact same profit number as you were at the original price point. So the idea here again is that you would never know this unless you tested it and understood the impact on conversion at each price point. And then once you map in your input costs, your cost of goods sold, then you can understand what the profit impact is going to be. And this is going to be the most important component when we start to look at the tariff environment, because the tariff environment is what's going to be impacting your input costs. So understanding at each price point at the new tariff levels that are increasing your inputs costs, what's the effect going to be on profit? And this is what you and your team can then use to start to make strategic decisions about how much to raise pricing, how much of that tariff cost do you want to eat, or how much of that you should be passing on to your customers. Eric, anything you would add to that? I know it's just a simple example.
Yeah, no, I think the other thing that I would add too is like this example is also based on like session-based conversion rates.
Yeah.
The other thing to, I think, account for beyond this is even the impact that that'll have on lifetime value. So for example, if you were able to run this, let's say another hypothetical here, right? Like I only bring I mentioned like the inputs increasing in cost as like one scenario. There are many other scenarios, even if you're like domestically produced and, you don't have to worry about tariffs or you have enough control over your supply chain that, you don't have to consider for unexpected increase in your inputs. There's also the opportunity to compete against your competitors more aggressively on price. If you do understand that, like for example, if you understand that on a session-based conversion rate, your drop in conversion rate is nominal enough to result in a little change in overall revenue when you change the price, that can increase your conversion rate enough that you can start to take market share from your competitors because they might not be able to do that, or they might not even have the data point to confidently say like, oh, I can drop my price point and I'll increase conversion rate so much so that I'm starting to take market share. If it's an item that is often replenished or or if your particular brand has a really high repurchase rate, even more reason to do this type of A/B testing and see how aggressive you can get on pricing, because then you can start not just like doing this type of a calculation to make sure that like on a cash flow basis, you can support that decrease in price, but then also start taking into account additional metrics like your repeat purchase rate and your lifetime value so that you can then start to understand, okay, if I do get someone in the door at a discount, what is the likelihood that they're going to come back and purchase again and again from my shop instead of somebody else's? subscribe and save is a perfect example of this in action. So anytime you go to a site and you see the ability to subscribe and save, all they're doing is reducing your entry point, knowing that your repurchase rate is going to be higher because then you have a subscription. So same principle applies in that like you may be able to lower your price points in order to take market share that then also increases your total revenue over a longer time period than just a session-based conversion rate can as well.
Yep. So understanding and measuring that customer lifetime value as part of the test if you are a subscription brand is a huge opportunity. And I think the one of the call out there around, the opportunity here is not just for you to know what you can adjust your pricing to, but it's the fact that most brands aren't doing this. Um, Rarely do we run across a brand that has already done this or has done this enough or recently enough to have accurate data. And so if you do find yourself in a very competitive space environment, this alone is going to give you data that most brands just haven't even taken the time to collect. All right, so I think let's jump real quick here and let's talk a little bit about sort of shipping, just to add to the learnings around price testing. Let's talk about how we think about shipping threshold testing and how to set what those shipping thresholds could be. I think while this, Eric, you'd probably say this probably has less of an effect and is maybe less of a lever to pull than price testing. This is a question that we get from almost every brand we work with that does offer a shipping threshold or a free shipping threshold, where they feel like they could better set that threshold to either increase conversions or increase AOV. So how do you
Yeah.
think about, if a brand comes to you and goes, hey, we've got a shipping threshold that's $50. We don't know if that's right. How do you think about optimizing that for them?
Yeah. So this is most likely going to be less impactful than testing a price, but it's a lot easier. So it's a lot easier to grasp, right? Like usually this is the function of marketing, right? Where we are setting a free shipping threshold to entice people to purchase at a high enough average order value that we can eat the shipping costs for them. The so usually this takes like less decision maker approval, and you can be a little bit more agile in running a free shipping threshold test than you can, like backing out against margins, getting approvals from like your finance and accounting team to do so. This is usually like the dip of the toe in the water of price testing is to test your free shipping threshold. Free shipping thresholds are great because it's almost table stakes at this point that every website is going to have some level of free shipping threshold, or even if it's not free, like a reduced rate shipping rate if you reach a certain threshold of average order value. But a lot of times those are just kind of like picked as like, here's a nice round number, $50, $100. Those I think we can dial in to help improve margins, as well as a lot of times improve average order value and sometimes even conversion rate too. The framework that we use to set this up is we would usually just take a look at all of your subtotals across a time period, say the last 60 days. Look at the subtotal of all your order values, before, after discounts, but before tax and shipping, because that's the number that your shipping threshold will be calculated off of. We don't look at average order value. What we look for are modes. So within a range, what is the most frequent number of order values? So let's say, for example, if you have a site where your free shipping threshold is $50. Ideally, you would see, oh, I have a ton of cart values that are $45. And that's the biggest audience of cart values that I'm trying to lure a little bit higher in their cart values. So we take that, we dump it into just like a bar chart. You can visually usually see really quickly, like where are those modes and what are those ranges? Is there a greater range of $40 to $45 cart values? Or is there a greater range of, say, $35 to $40? In that case, maybe we could lower that free shipping threshold to $45. That way, it's a smaller step for a bigger audience to take to increase their free shipping threshold. When it comes to testing free shipping thresholds, we take a similar approach as price testing, where we usually want to test a higher and a lower number just to make sure that we're A, not leaving money on the table, and so that we can then also calculate as we change that free shipping threshold, it will certainly have an effect on average order values, but we also want to measure the effect that it has on conversion rate. Because at some point, you don't want to increase it so high that it starts to impede conversion rate. We'll run this test preferably with a higher threshold and a lower threshold. And then that'll give us some directional sense of, okay, maybe we should test more granular um, threshold values lower or higher. It helps give you that first kind of like directional step by taking a look at what is your profit per user. That way we can look at the average order values, the likelihood to convert, and then even take into account those shipping costs that you may incur, an increased amount of like shipping costs that you're eating as a company, or allocating to your marketing spend. That way, it gives you every data point along the way to make really data-driven decisions about where that free shipping threshold should be.
Yep, love it. I think it's, again, I think it comes down to most brands typically just sort of set a number based on competition, right? Or they kind of just guess. And this gives you a much better framework for at least using some data to understand, what's that common order value? Again, not your AOV, but what's that common order value? And then using that as a good sort of data point to then decide where free shipping thresholds should be, and then testing into it. Cool. All right, guys. I've dropped a note in the chat. If anybody has any questions, again, we're not doing any like tear down today or anything like that. We're typically sort of taking any URLs or any of your brand URLs, and we're actually look at sites that do tear down. So we're not doing that today since this presentation doesn't lend itself well to that. But we are here to answer any questions that you may have about this process or how to implement this process for your specific brand. So if you guys do have questions, happy to open it up to questions at this point. If you guys want to drop any of those questions in. The only last point I was going to make was just going to be, if you are looking to do this, you are looking to do shipping, threshold testing, or price testing, the two tools that we typically recommend are either IntelliGems or Visually, and that would be visually.io if you wanted to type it into your browser. IntelliGems, I would probably say, is the sort of the gold standard in the space. They've been around the longest. They were really, I think, really launched to do price testing, even though they do more than that now. They do general, A/B testing now. But we still find them to be one of the best tools that we leverage for price testing for our brands. And then Visually.io is a newer tool on the market within the last couple of years or so. They also do broader zero A/B testing for Shopify, but because they are a Shopify native app, they also tap into your pricing and product pricing and shipping data, and so they do allow for A/B testing around pricing and shipping. Eric, are there any others that you would recommend looking at, or are these really just the main two that we use?
Well, those are the two for price testing for sure.
Yeah. Cool. Okay, that sounds great. Question. So Rachel has a question. How long do you recommend running A/B tests? What's an ideal amount of, let's see, what's an ideal amount of data points?
Okay. So you're thinking about it exactly the right way, is what is the right amount of data? And then that amount of data is just going to be like associated with amount of time, right? So by default, we always expect to run an A/B test for 2 weeks. For planning purposes, that's the way that we kind of like map out our playbooks is, these tests will run for 2 weeks, then we can move on to these tests. But we don't let the calendar decide. Just like you mentioned, we let the data decide. So what we want to do is reach a certain level of statistical significance in order to reach, usually like we'll use like 90%. Sometimes if it is like a high impact test, like pricing, for example, you might want to raise that significance floor higher to like 95, 97% to be absolutely certain. The statistical significance will, at its simplest, requires two things: a large enough amount of data, but then also a large enough degree of change between the variations that you're testing. So there's no hard and fast rule, like for example, like, oh, you need 1,000 purchases in order to reach statistical significance. Because if those 1,000 purchases have a very small change in conversion rate between the two, you probably still won't have a high degree of statistical significance. So those are the two inputs that then determine how long it should run for. But for planning purposes, we usually look at about 2 weeks.
Perfect. Then Joseph is asking, I think, a much more specific question, for his brand, which is, the current pricing is set at $16.99 per item, so $16.99 per item. And so he's asking, should he test pricing using the sort of, I think, the same methodology that we had shown in our examples, which is like a 10%, 20%, 30% increase. And so Joseph, those were just examples, just for illustrative purposes. But I do think it's a good question. So, Eric, in this scenario, if you were talking to Joseph about doing price testing, what would you want to ask him, or how would you think about setting pricing tiers for a product that is priced at, 16.99?
Good question. I never want to rely on just like percentages, but it also kind of depends on the product too. So if you have like a very utilitarian product, like let's say you're buying, I don't know, like bottled water from Amazon, you'll probably see that those prices like almost seem somewhat random, right? It's not like nice, clean, like 16.99 or a whole $17. It's like usually going to be something like $16.43. That type of specificity in the pricing really only lends itself to really utilitarian purchases in high competition arenas. So I wouldn't necessarily recommend like, oh, just do 10, 20, 30% because that's going to give you kind of like just odd looking numbers. Those odd looking numbers, if that's the right approach for your product, that may help. But I think most of the time we want to keep it a little bit more like round numbers, right? So I might say, for example, between if we're starting at 16.99, maybe testing down to like 16.49 up to 17.49, smaller increments like that, so that you're not just kind of like ending up with what the customer might seem as like, oh, that feels like a really random price, and then just starts to create like anxiety in them and uncertainty, like why is this such a specific price? The other aspect I think to keep in mind is to make sure that like you want to make sure that the different prices that you're testing also make sense for the margin profile. So when we always want to have like the most amount of data points that we can for different price levels, but we never want to test something that we know is just not sustainable, right? We want to make sure that the prices that we're testing make sense for the current or feasible margin profile for the product or the service.
And Joseph was saying he sells, it's like grooming products for men, so like beard oils, beard conditioners, things like that.
Yeah, I would think probably, yeah, you want to keep those a little bit more rounded. So like
Agreed.
even if it's something that ends in 9 or 0, like I think that's even like a good enough guardrail to keep those price points in. But just like I don't know, like back of the mental math here, I think if you just did like round 10, 20%, you're going to end up with some of those just like less common figures and with like a $16.07 beard oil.
Yeah, I think it's a good point. And then Suzanne had asked and we touched on this a little bit, but she was asking, when we are running, price testing, what are those key metrics very specifically that we are tracking?
Good question. So conversion rate. How likely are people to purchase at these different price points? Second is average order value. What's the cart size and the change in cart size based on those? Because when you think about cart size, there's going to be multiple inputs to it. There's the average quantity and the price of the items. So what you want to make sure is that increasing the price of a single item doesn't then lead people to buy one item instead of two. Then we'll also take a look at profit. So what is your cost on each of the items that you're price testing? So then we'll take that and back that into your revenue per visitor in addition to your profit per visitor. So baseline metrics, we always want to get our sessions, transactions, cost, and price per product. And then with those metrics, we can create all of the calculations for conversion rate, profit per visitor, and revenue per visitor from there.
Yep, that's great. And then I'll add this sort of additional question onto that. Eric, how much of that data is being pulled through the testing tool like Visually or IntelliGems versus needing that to be connected to like a Google Analytics?
So we'll use your like each of those tools would be using your Shopify data as opposed to using like a third-party pixel like Google Analytics or any other analytics tool. We're going to use specific online storefront, if it's a Shopify site, using that Shopify data so that we're reporting, so there's less data loss than there would be on a third-party pixel, and you just get a lot cleaner data. Also, within your Shopify admin, if you have set up the cost of the products, we can, with IntelliGems and Visually, easily calculate your profit per user because that value of the cost of the item is already in there. If you're not inputting COGS into Shopify, that's not necessarily a blocker. We can do that on a lot of times. We'll just, like choose like a company-wide one. If we say like, oh, our margins are 27%, just apply that to your average order values so that you can still get a sense of the impact that that's having on the margin profile. So not a blocker if you're not inputting those. But I think we find that most clients are using that cost of goods field in Shopify.
Yep. And then Rachel has a great question here, which we've gotten before, which is when you're price testing using Visually or IntelliGems, have you run into like what she's calling customer success issues where customers are upset because prices are changing so dynamically when they return to the site consecutive times?
So these experiences will be sticky. So to the effect that we can unify multiple sessions across an individual user, these testing platforms ensure that that user sees the same price throughout the period of that test. Once the test is over, they may see a different price based on which one won. But that is one of the main requirements for a testing tool is to be able to unify those sessions across an individual visitor so that they aren't, for example, seeing, like different prices, in session or across multiple sessions throughout their purchase journey.
Perfect. Rachel, I hope that answers the question on that front. Cool. All right, perfect. She said yes. Great. Well then, guys, I don't have anything else to go over here today unless anybody else has any other questions. We'll let anybody else here that wants to drop a question to the chat, feel free to do so. Otherwise, we'll sort of move towards wrapping things up. The only thing I would add here for everybody else who's still on the call with us today is that if you do want to have us run a full site analytics analysis, a full site CRO audit on your site, feel free. You can just email us directly. You can go to the site to bluestout.com/strategy. You can book a call with us. Happy to walk you through what that process would look like very specifically for your brand. And again, if you're joining us live today, we are offering 50% off our full site audit. So it's a fantastic opportunity to take advantage of that if it's something you've been thinking about doing for your brand. The only requirement is that we just need brands that are doing at least 100,000 sessions a month. That's it. So long as you're doing that level of volume to the site per month, then you're a candidate for one of our audits. Eric, anything else you'd add here? Any closing remarks?
No, I mean, I think price testing is, like you mentioned, like it doesn't lend itself to the most visual presentations, but it
I
does
know.
tend to be one of the more impactful tests that we do run. And I think it's really important, especially in the changing environment that we're in right now, in terms of consumer confidence and tariff strategies, to make sure that you do understand the elasticity of demand relative to the price that you're able to charge. So even if you even if this is the only A/B test that you run, I do think it's still a very important one because it gives you intelligence about how to operate your business that can help you be nimble based on whatever comes next. Because it definitely has been a very dynamic year in e-commerce, to say the least.
Yeah. in a year that I would say everybody is defining as just uncertain in terms of what's going to happen, this gives you a game plan that gives you a lot more certainty in how you should react based upon however the environment is going to change. And I'd say, for all the brands that sort of come across our door as clients, very, very, very rarely are we seeing brands that have already run A/B testing around pricing before, or even have that at the top of their list. So it's something that, I think a lot of people just forget to do or don't even think about as being a lever that they can pull, when in reality it could be the biggest lever that you pull that affects the bottom line. So hopefully you guys found this helpful. Again, if you have any questions, don't hesitate to reach out to us directly. This is our, what month is it? Is it May, end of May? So we'll be doing another webinar event in June. And once we're done with this today, we will also be uploading this to our YouTube channel. So if you guys want to rewatch any components of this, you will get a notification via email once that is uploaded, and you guys can rewatch the webinar. But hope everybody found this helpful, and we'll see you guys next time.